Hello, my friends. Hope you are all doing well. Just a moment ago, just like all of you, I opened my computer and saw this market chart. That'll make your heart pound and your palms sweat. Have you all seen it? The spot price of silver has really smashed through the $90 mark, hitting $90.07, a single-day gain of over 3%. And our big brother gold isn't to be outdone, standing firm at $4,632. What do these two numbers mean a few years ago, or even just a few months ago? If someone told me that silver would see $90, I probably would have thought they were dreaming, and would have even told I also paid special attention to the chat room next to the market software. Don't rush, don't panic. In this moment of information explosion and restless minds, what we need most isn't to follow along shouting slogans, but to calm down and think. I've prepared for today's video for a long time, and I am going to take you all to see through this red-hot facade of prices, to see a fundamental transformation that is happening, one that is deeper and more shocking than the rise and fall of prices. This change is about whether the money in our pockets is actually worth anything anymore. It is about whether the wealth we've worked hard our whole lives to accumulate can be securely passed down. Today's content is very substantial, the value is extremely high, so please everyone be sure to be patient and watch until the end. Alright, then let's get started. First off, let's chat about this $90 silver. What story is it really telling us lately? I don't know if you all have had this feeling, but whether you are at the wet market buying groceries or exercising and brewing tea in the park, more and more people are discussing precious metals. Before, when people met, they'd ask, "Have you eaten?" But now, several of my old friends ask me as soon as they see me, "Man, that silver is going up like crazy. I hear it is going to hit $100. Is that for real? Should I cancel my fixed deposit at the bank to buy silver bars?" The silver shops near this atmosphere reminds me of many critical moments in history. When something that was originally relatively niche, something people only thought of for weddings, suddenly becomes a hot topic on every street corner, it usually means market sentiment has reached a tipping point. Looking at those anxious comments, some say it is a dead end, some say they don't care about the price at all. These words, though brief, perfectly capture the extreme psychology of the current market. What is a dead end? For those who are short on silver, who think silver is worthless, this is indeed a dead end, because the price has risen to the point where they doubt their existence, to the point where their margin calls wipe them out. But for us who hold the physical asset, this is a lifeline for preserving our assets. And that phrase, "don't care about the price at all," really hits the nail on the head. What does this show? It shows that the capital in the market now is no longer here just to make a profit from the price difference. In the past, we bought low and sold high to earn some grocery money. But the capital entering the market now, it comes with a sense of urgency, like they're fleeing for their lives or, let's say, hedging against risk. They don't care if it is $90 or $91 today. They only care if they can exchange the paper money in their hands for that heavy piece of metal, because in their eyes the risk of paper money has already far surpassed the risk of price fluctuations in gold and silver. We often say that fortune is found amidst danger, but in my opinion for us, we're long past the age of wanting to get rich overnight. Stability is worth 1,000 pieces of gold, and protecting our principal is more important than anything. Seeing silver rush up to $90, of course we're happy. This proves our past persistence was right, and that we weren't fooled by those experts. With gold and silver, don't grow on their own. They don't generate interest. Their price increase is actually a reflection in a mirror. What is reflected in the mirror is the devaluation of currency, the collapse of credit. If silver really skyrockets out of control, that means the credit of the US dollars in our hands is rapidly eroding. If that day really comes, buying a bag of rice at the supermarket might cost over $1,000. Utility bills could double, and the pension we think is enough now might not even cover medical expenses then. So, A huge rise in gold and silver is actually the market casting a vote of no confidence in the current monetary system. Faced with this kind of historic market trend, what we need isn't to follow the crowd in chat rooms yelling to buy and sell, not to dance to the tune of emotions. We need the kind of composure where you wouldn't flinch even if Mount Tai collapsed before you. We need to figure out, where is the driving force behind this rally really coming from? Is someone hyping it up? Or is there really a major problem with supply and demand? Only by seeing clearly can we stand firm amidst the storm. Okay, so let's unveil this secret that sends shivers down the spines of Wall Street elites and even leaves them a bit baffled. A lot of friends ask me, why do you say this rally is different from before? It has risen before, didn't it? Just fall back down later. Good question this time. It is really different. The answer lies in an indicator we usually don't pay much attention to, but is critically important, and that is the price relationship between spot and futures. I know this might sound a bit technical, but don't worry, we're not going to use complex jargon. I'll tell a real-life story that everyone can understand. Imagine it is now the eve of the summer typhoon season, and the weather forecast says a super typhoon is coming. You go to a fruit store to buy some love mangoes. The owner tells you, the ones in stock now are 100 yuan each. But if you are willing to come get it next month, I'll save it for you. And it'll only be 95 yuan. This sounds reasonable, right? Why? Because if you don't take it away now, the owner has to keep the mango in the fridge for you for a month. He has to pay for electricity. It takes up space in his fridge. He has to bear the risk that the mango might rot and his capital. But my friends, prick up your ears and listen carefully. In the current silver market, a phenomenon has appeared that goes against all common sense, is extremely bizarre. You could even call it freakish, and it is called backwardation. What does this mean? It is like you go to a fruit stand and the owner says, a mango will be 100 yuan next month. But if you insist on taking it away right now, immediately, this very instant, it'll be 120 yuan each, and the price is firm. What does this tell us? If you are the buyer, why would you be willing to spend an extra 20 yuan to take it now? This means the buyers in the market have gone crazy. Or, to put it another way, they're panicking. They don't care that the price will be cheaper next month. They'd rather spend more money now to physically hold that silver bar, that gold coin, in their hands and put it in their own pockets. Why? Because they're scared. They're afraid the fruit stand will go out of business next month and the owner will skip town. They're afraid a typhoon next month will wash out the bridge and no mangoes will be shipped in at all. They're afraid the pickup voucher in their hand will become a worthless piece of paper when the time comes. When the price of silver has already reached such a high of $90 US, logically speaking, everyone should be thinking, I'll wait a bit, I'll buy when it drops, or that buying futures would be more cost effective. But that is not what is happening now. Right now, the higher the price goes, the more ferociously people scramble for physical stock, causing the spot price to become even more expensive than the futures price. This is a super strong warning sign. This means the big money in the market, the smart money, those institutions managing trillions, are already having a serious crisis of confidence. They don't believe the inventory data in the exchange's computers. They think it is a numbers game. They don't believe the contractual promises of paper gold and paper silver. They think those could default at any moment. They are voting with their money, telling the whole world, I only trust things I can touch. I don't believe in anything else. This isn't just a price increase. This is the very foundation of the entire financial system shaking. This signal is more worthy of our deep thought than the price itself, because it tells us that the rules of this game are changing from credit-based trading to physical is king. Hearing this, some friends might feel puzzled or even think I am being an alarmist. This isn't right. When we watch the news, don't they, say there are still plenty of silver mines on Earth. Humans have been mining for thousands of years, aren't they? Digging every day over in Mexico and Peru. The inventory should be substantial. So how can you say there is a shortage? That is an excellent question. This is precisely the blind spot for many people, and also the reason why so many people will miss out on this market rally. When we talk about a shortage, we don't mean there are no more mines underground, nor that the silver atoms on Earth have disappeared, but that the physical silver available on the market for circulation has vanished. This is like real estate. This analogy will surely resonate with everyone. You see houses built densely packed along the road. There are tall buildings everywhere, and the vacancy rate isn't low either. But why don't housing prices fall? Why is it that when you want to buy a house, you always feel like there are very few good options? Because if all the landlords, all the homeowners expect housing prices to rise, or they feel it is not safe to get cash from selling the house, afraid that cash will depreciate, then they would rather leave the house empty than sell it. This is called reluctance to sell. The houses are still there, but they don't enter market circulation. So for people who want to buy, it is a shortage. In the current precious metals market, an epic wave of holding back sales is happening. Someone said, when I go to pick up the physical stuff, I don't care at all about how high or low the price is. This sentence speaks the truth and also reveals the essence of the current market. The real big buyers, whether it is the central banks shipping gold back to their countries or asset protectors like us, the moment we buy silver bars and take them home, lock them in a safe, or bury them in our own backyard, this silver is then deregistered from the market circulation pool. We won't take it out to sell just because it goes up by $10 tomorrow, because we buy it for inheritance, for survival, to leave something for our grandkids. Unless it is truly a last resort, otherwise this gold and silver will not return to the market again. So the circulating supply in the market is getting smaller and smaller. This is like a big pond which originally had a lot of water, but now everyone is taking buckets to bring water home and store it. So the water level in the pond gets lower and lower. At this point, if you pour in just a little bit of new capital, the water level will fluctuate violently and even overflow. And I must remind everyone, silver is different from gold. Most gold is used for jewelry or central bank reserves. After it is mined, most of it has continued to exist in various forms for thousands of years. But silver is different. Silver is the mother of industry. It gets consumed. There is silver in your phone. There is silver in your computer. The solar panels on your roof are a huge consumer of silver. And the electric cars on the road also need silver. This silver is used in industrial products. And a lot of the time, because the amount is tiny and recycling costs are too high, it ends up being thrown away with e-waste truly disappearing. On one hand, the industrial demand for silver from emerging technologies is frantically snapping up supply. On the other hand, investors like us are desperately hoarding it. These two forces colliding together have created the current situation where even with money, you might not be able to smoothly buy large quantities of physical stock. Before, when you went to a silver shop, the owner would take out several trays of silver coins for you to choose from. And now, a lot of the time, the owner will tell you, sorry, you have to place an order. You have to wait 2 weeks, and the price will be based on the price at that time. This is the most real supply and demand imbalance. During this process, you all might have noticed in the news or seen people cursing in group chats that the US exchanges have raised the margin for silver. Again, many friends, as soon as they hear this news, their gut reaction is to get angry. Hemp. It is those Wall Street big shots playing tricks again. They get jealous seeing us retail investors making money and want to use this dirty trick to push the price down. This is an unfair game, to be honest. This kind of thing has indeed happened over the past few decades. I've honestly experienced it several times. As soon as the margin is raised, many people who are long, because their pockets aren't deep enough and they can't meet the margin call, are forced to sell to close their positions, and the price drops in response. I can totally relate to this feeling of being harvested like leeks. It is really infuriating. However, this time, the situation might be a bit different. I'd like to ask everyone to first put aside your anger, change your perspective, and look at this from the standpoint of financial security, or even from the perspective of the exchange's boss. This might not be a simple crackdown, but rather the system sending out a distress signal. Let's use a credit card as an analogy, so it is easier for everyone to understand. If you usually make your payments on time and have good credit, the bank feels very secure, giving you a high credit limit. But if you've suddenly started swiping your card like crazy recently, almost maxing it out, and there are rumors out there that you are up to your eyeballs in debt, and your job has become unstable, at this point, to prevent you from just throwing up your hands and being unable to pay, turning into a bad debt for the bank will definitely take action, right? It might lower your credit limit or require you to pay a portion of it first to prove you still have the ability to repay. This is a standard procedure for the bank to protect itself from going bankrupt. It is the same for the exchange. The exchange is a platform for everyone to buy and sell. So what is it most afraid of? It is most afraid of default, when the price of silver is like it is now, casually jumping 3%, 5%, or even fluctuating 10% in a single day. This kind of volatility is extremely intense. The exchange gets scared too. They're afraid that if someone bets on the wrong direction and the price keeps rising, they'll lose their pants and still won't be able to pay up and can't come up with the money. If these people can't pay up, causing a default on delivery, then who bears the loss? The exchange has to bear it. Then the entire exchange's credibility goes bankrupt. No one would dare to trade here anymore, and the whole market would collapse. So frequently raising the margin is actually the exchange's risk control department doing a stress test. They are telling the market, the waves are too high now. The boat is shaking too violently. Everyone needs to hold on tight. People whose pockets aren't deep enough, please get off the boat first. To avoid capsizing, this shows that the market volatility has reached a point where even the regulators can't sleep at night. And there is a very paradoxical and very interesting logic here that everyone must understand. Raising the margin, while it certainly increases the financial pressure on those who are long, for those who are short, the pressure is actually even greater. Why? Because the price is going up. They were already losing money. Their books were all in the red. Now the exchange is telling them to put up more money. This is like rubbing salt in the wound. What happens if they can't come up with the money? They'll be forced to buy back silver to cover their positions and stop the loss. Pay attention now, they are buying back. This buying, in turn, becomes a powerful buying force, pushing the price up again. This is what is often called a short squeeze in the financial markets, or a stampede of the shorts. So don't just see a policy change and think it is bad news and think the sky is falling. Instead, this indirectly proves that this bull is too fierce, its momentum is too strong, that even the exchange's reins can barely hold it back. This is actually a display of the strength of the bulls. Besides the financial aspect, we also need to pay attention to the real economy. We invest for our livelihood, but if the market gets chaotic, our lives will also be affected. When silver surges to $90, who suffers the most? Not us. We're happy to see our assets appreciate. The ones who suffer the most are the business owners who need to use silver as a raw material. Imagine if you were the owner of a small or medium-sized enterprise making conductive glue, or a purchasing manager for a solar panel factory in the South. Back when silver was $20, you could buy as much as you wanted, pile up inventory as you pleased, and manufacturers would even treat you to coffee, begging you to place an order. Now silver is $90 to avoid running out of materials, and to keep factories running, companies will be forced to scramble for goods on the market at any cost. They won't care if it is 90 or 95. As long as there is stock, they'll snap. Having said all that, let's pull the camera back and focus on ourselves. Faced with $90, or even the soon to come $100 silver, what should we do? First, we need to have a correct perspective on wealth. This is very important. if silver rises to $100, but the purchasing power of the cash in our hands is cut in half, then we haven't actually gotten any richer. We've just preserved our purchasing power and haven't been devoured by that big monster, inflation. That is all. This is like when the water level rises, the boat floats higher. Our boat has floated up with the water. We haven't sunk, but we're still in this river. This is our original purpose for investing in precious metals. Defense. Don't think you've struck it rich and start splurging, because prices have probably gone up as well. For those of us who hold physical assets, this is a lifeline. It is the wealth we've worked hard our whole lives to accumulate. An ark to get us through the winter safely. But I must emphasize again, absolutely do not start getting greedy just because you got the direction right. I've seen too many people who, because they saw their neighbors making money, couldn't resist betting all their money, even borrowing money to buy silver, thinking it is a can't lose business. Absolutely don't. Because on the road to $100, $200, it definitely won't be a straight line. In between, there will definitely be drastic pullbacks. There will be huge ups and downs. There will be those terrifying moments where it drops 10%, 20% in a single day. That kind of whipsawing volatility will throw everyone with a weak heart who is too highly leveraged or who invested with borrowed money off the bus. Once you've been thrown off the bus and the price goes back up, it'll have nothing to do with you anymore. And that is the most tragic thing. What we need to do is be like a big tree with deep roots. So when the wind blows, only the leaves sway, but the trunk doesn't move an inch. Friends, watching silver hit $90, this is a historic moment. Our generation is fortunate enough to witness the changes of this great era. I have a few words I'd like to share with everyone. As a summary for today, first, don't be hijacked by your emotions. Looking at those comments in the chat room, yelling to dump it all, yelling to run for it, yelling to go all in, just laugh it off. Don't panic because others are panicking. And don't you follow suit and go all in, because others are greedy. A firm conviction comes from an understanding of the logic, not from the jumping of prices. You just need to know that the physical thing you are holding is wealth that has been recognized by humankind for thousands of years. And that is enough. Second, check your asset allocation. If you already hold silver, congrats. Hold on to it tight. Don't be easily tricked into selling, and don't be easily fooled by sweet talk into exchanging it for some high-interest wealth management products. If you haven't gotten in yet, or feel you haven't bought enough, don't be in a rush to go all in with your entire fortune at once. Buy in batches, buy slowly, buy on the dips. Even if the price is a little high, it is for peace of mind. Once you've bought it, treat it as building your nest egg. Don't think about selling it next week to make some grocery money. It is best if this money is spare cash that you won't need in the next 3 to 5 years. Third, focus on tangible assets. Stay away from paper wealth. In this age where trust is scarce, what you hold in your hand is what is real. If you have the chance, even if it is a few silver coins, a few small gold bars, put them at home or in a safe deposit box you trust. That weighty sense of security is something a string of cold digits in a bank account can't give you. This grand drama of monetary change is only halfway through. The road ahead is still long, the storms might get bigger, and the script might get even more exciting. But I will always be here with all of you, using the simplest words to help you see the lighthouse behind the storms. All right, that is all for today. If you feel that today's in-depth analysis helped you see through the market's fog and put your mind at ease, please don't forget to hit the like button for me. That is the greatest encouragement for me. Please also subscribe to our channel and share this video with your friends who are also worried about their retirement funds. We will continue to be here, to be the lighthouse on your path to wealth, helping you keep watch through every storm and surge. No matter how the world changes, I hope everyone can eat well, sleep well, and be able to laugh. I am your old friend. See you in the next video. Wishing you all peace and safety.